participants, panelists, and organizers, a very good afternoon to all of you, and thank you for joining us today. Now, to make sure that we are all in the right place, the topic of today's conversation is rural livelihoods and the role of FinTech. If you're not in the right place, you're lucky. You may stumble on some insights. So now I know this is a standard thing to say in panels, but I truly believe that it is a problem that is important and needs urgent attention. Now, let me put that in context of India and explain why. Broadly, this discussion is at the intersection of two sectors, so if you want to call it that, and we'll explore the synergies between rural livelihoods, FinTech, or technology more broadly. Right? And on the rural livelihoods side, I think we all know this, but let me still reiterate this. Agriculture continues to be the primary source of employment and livelihood for close to about 50% Indians. We've made some progress from about 70% to 50%, and this is the national average. So rural would be, of course, a lot more. Now it's contributing about 16% to the country's GDP. Now let's contrast that with US, which is about close to 1.5%, while contributing 1.5% of that population, while contributing 5% of the GDP. For China, it's about 25% employed by agri and allied agri sectors, about 7 to 8% of their GDP. So, while all of these countries have, of course, unique in their history, their context, not to compare or for us to become like that today, but this ratio of our agri employment to productivity is just not sustainable. There is just no way, we have to change that. And COVID, has only exacerbated this problem, especially for the migrant workers and a lot of people who have lost jobs or small businesses. So there is just a really important problem there. Now, coming to the tech and FinTech side of it, we all know we've made great progress over the last decade or so. We've included about 1 million people digitally with basic access, to basic financial services. And there is still some ground to cover, but we are on the right path. So the larger questions that we will examine during this panel is how can we use or leverage the awesome tech around us, again with a focus on FinTech, but tech more broadly, to catalyze livelihoods. What are some of the insights, lessons, and challenges as we take that path? And we have just the right set of people to help us uncover this. We're supposed to have Mr. Balamurugan, who I don't think, unfortunately, couldn't join because of technical issues. So Amit, who is well aware about their work in Bihar, will. So we have, Amit Arora from World Bank, who's 2 decades, working on the issues of livelihood and financial inclusion in India across a diverse set of institutions, and he now leads World Bank's rural sort of development programs in India. We have Audrey from UNCDF, who has a terrific experience both around the financial health as well as livelihood space. And we have Steve, who in my view is a unique FinTech, with wide presence across the country. With a group, with that kind of a group, I think we can all expect to learn at least a thing or two that we can all take away and implement in our work. Make the lives of low-income people a little better. So in terms of today's conversation, I'll end this I'll end my part in the next 30 seconds. In terms of today's conversation, we'll begin. This is how we'll structure it. We'll begin with about 5 to 7 minutes of introductions from each panelist, more about their work and what they are focused on. We'll begin with Amit, who will share. So in terms of order of introduction, we'll begin with Amit, who will share about their rural finance and livelihood strategy, from how they approach and design projects and how they integrate technology, set goals. After Amit will go to Sasi, who will share more about their journey and the work of Sabke and so far. Then the first round with Audrey sharing about UNCDF's perspective and their work focused on rural livelihoods, agri, and FinTech in India. And after the first round of those conversations, we'll move to a moderated Q&A. I have a lot of questions for them, where we'll see how much can we discuss given the time we have. So over to you, Amit.
Thank you, Krishna. if I've understood your question correctly, because there was some disturbance, in the line, you'd like me to start with talking about the rural livelihood practice and our strategy and so on and so forth. So, briefly, I would say, how do we pan out our role in the Indian or the South Asian context is, as you would know, in the till the 90s, the late 90s or even part of early 2000, we've conventionally had, a plethora of poverty eradication programs, who've played their role and, helped in laying the foundation layer. In the last 10-15 years, our rural livelihood programs have been trying to move the needle further up. People who are, at a stage where they are beginning to come out of poverty, how to find next level of entrepreneurship, enterprises, or larger, broader livelihood platforms for them, so that they stay out of poverty and continue to progress out of poverty. So this would be covering both farm and non-farm areas, and increasingly our effort is to bridge the gap between what is a public good investment, which is more structured, for poverty alleviation, and the markets. So there is a gap, in between, before the two sides connect to each other and leverage each other's strength. So we try and play the role of that bridge and facilitate demand side's engagement with the markets. Just to give you an example, a typical project in, let's say, a lower income state would focus in mobilizing community members, institutions, aggregating them, and investing in developing their capacity, and bring them to a stage where they can engage with the market sector, for forward linkages, for enabling technology, and these kind of things. So this is a typical rural livelihoods projects. Depending upon the specific contours, I can talk later more. This could be in the financial services sector. This could be in non-farm employability. This could be agriculture. So that's how we broadly try and structure this. And that's for it now, I think.
Sure. Thanks, Amit. I have some follow-up questions, but I'll reserve those for later, and we'll perhaps move to Sasi for quick.
Thank you, Krishna. I hope I'm audible. And I'm audible, right?
Yes, I can hear you, Sasi. Thank you.
My sincere apologies about the video due to some technical glitch, not able to open that. But I think we wanted to move to brief on what Basics and Sabke does in this area. So Sabke is I would say, simply put, second generation basics institution, which have been in the forefront of many innovations in the financial inclusion space, be it whether it's basic microfinance business that was started a couple of decades ago to the most advanced technology-driven inclusion practices. So while various experiments were being done, as India has also experimented big time on the policy front, in mid 2000, 2005, 2006, business correspondence has been sort of rolled out as a potential alternate channel for enhancing financial inclusion, bringing banks, into the center. Although many other policy initiatives were made, but this is, I think, is a path-breaking stand that government has taken, especially RBI has taken, wherein some experiments were done by Basics and many other organizations to try if that outsourced model of banking could really work. And the central piece of that would be technology. And we did test some technologies, and we realized that unless we can enable real-time transactions, it is not really possible to build trust and enable true inclusion, primarily from helping people open bank accounts and save money and transact from those bank accounts, which is, I think, very I would say the stage zero of financial inclusion. So in 2010, when government and RBI has decided that this business correspondence model can be opened up to larger ecosystem players, Sabke was born as an alternate channel institution in addition to the microfinance business that we do. And we have built technologies that are easily can be integrated to banks' core banking solutions and enable mobile banking transactions on the ground. But most of the business was built on an assisted model, which by what I mean is agent networks are conceived as good middle solution to a bank branch and a customer. So these agent networks acted as a bridge to ensure that banking transactions can be enabled for the citizens that were not included for a long time. So we are in that space. We deploy these merchants who run their own businesses, but they also double up as banking agents on the ground, equipped with technology solutions. Primarily, the solutions today work on Android phones. We started off with a basic phone when we started our business. And the biggest push came when PMJDY, the Prime Minister's Jan Dhan Yojana, was unveiled in 2014. I think then a lot of things came together. There is a policy push. There is a technology that is getting ready. Mobile penetration has increased. Aadhaar penetration has gone up. So the whole jam trinity really started playing out. So for someone like us, we did ride on those rails. And today, there's a vast network of agents by people like Sabke and many other peer organizations. And these are now, in a way, cornerstone to connect the citizens that are able to open bank accounts due to the mission-driven program that government has run, but servicing those accounts and making sure that everybody gets access to the basic financial services is something that we enable on behalf of banks. So Sabke is set up as a bridge between a bank and a customer, and trying to enable all kinds of financial services, liabilities, assets, payments, all that on seamless, mobile technology solutions that have been built in-house, and of course also through the infrastructure that the government has enabled in India. So I will stop there. So that's basically what we do, and we work with both public and private entities to help them as well to ride on this wave.
Sasi, thanks for this. And before we move to Audrey, just a very, very quick question in terms of if you could just share a little more about your presence in the across the country, your partnerships, presence in terms of geography and I don't know, number of agents or products, just very briefly, so that the audience can put things into context.
Sure, thank you, Krishna. So we operate in 24 states out of 30 in India, with, like I said, multiple offerings. About 10,000 plus agents have been enabled for primarily channeling payment and cash in, cash out services. But we also, as I was saying, facilitate credit, microcredit, primarily MSME credit on behalf of banks. That also is run through the similar model, but that's a bit more engaged model wherein the field staff operate on the ground because there's a lot of credit assessment that's required. We manage relationships with about 15 banks, private, public, small, large, rural banks, all varieties of banks, and roughly $170 or $180 million of book we manage for multiple banks in this space. Yeah.
Thank you, Sasi. I'll come back again to both you and Amit with some specific questions, but we'll have Audrey about the work.
Great. Thank you, Krishna. And I'm really delighted to be here among a group of distinguished panelists. So thank you very much for the invitation. So I represent the United Nations Capital Development Fund, or UNCDF. We're a UN agency. We were set up in 1966 with a very focused mandate of assisting least developed countries develop their financial infrastructure and find sources, both public and private, to unlock financing for the poor and vulnerable. So we focus on low-income populations. We currently operate in 47 least developed countries. And the mandate that I mentioned that I mentioned, it manifests in two ways. One, we work with governments very closely to unlock financing for local development. And the other, we work with governments again, but also the private sector to find innovative solutions so that we can reach last mile customers with financial services that are very relevant for them. So our work involves the intersection of policy and innovation. We have 4 work streams. The first is empowered customers. So we work a lot on financial and digital literacy to empower customers to use financial services in ways that are meaningful for them. The second work stream is open digital payment ecosystems. So we work with the system and a range of stakeholders to ensure that the systems that enable the use of financial services are open and interoperable. Our third one is inclusive innovation. So we work with both incumbents and startups alike, and we de-risk business models. So what that means is we engage in a lot of experimentation to figure out what models work, what models don't work. And we provide a lot of grants and technical assistance in that process. And the final work stream is policy and regulation. We recognize that none of the first 3 work streams will, really foster innovation for low-income people in the area of financial services if there's no enabling environment, which policies and regulations really promote. We also have some focus segments. So as I mentioned before, we focus on low-income people, but within that broad segment, we look at women, youth, migrants, informal workers, refugees, and micro enterprises. So I mentioned that we work primarily in least developed countries because that's really our mandate. But in the past 3 years, we have forayed into emerging and middle income economies. So we have a presence in Malaysia and China, and we run a program in these 2 countries called the I3 program funded by the Metlife Foundation, where we're working with private sector stakeholders as well as central banks in both these countries to find innovations that will work for low-income people. We're also going to be setting up a program very shortly in India, in the state of Odisha. I will talk more about it in the course of this panel discussion, but this program will focus on women, and it will leverage an existing government program called Mission Shakti, which is a rural livelihoods program. And we'll build on that to offer a range of services, financial services for women entrepreneurs. In terms of rural livelihoods, we have invested in multiple financial interventions across the globe. So we have invested in ag tech solutions, for example. We've helped digitize value chains, dairy value chains, tea value chains in East Africa, also in Nepal. We have invested in digital credit products in Asia and Africa that enables convenient and affordable financing for smallholder farmers. We've also invested and will continue to invest in e-commerce solutions that connect smallholder farmers and micro enterprises with markets that are stable. So this, in a nutshell, is what we do, but happy to elaborate.
Thank you, Amit, Sasi, Audrey, for an overview. Of course, I think I have a lot of questions, but let's start slowly going into the woods with more details. Let's begin this conversation with, I think with what we're all facing right now, COVID, right? So how the question for perhaps, maybe beginning with, again, maybe Amit and Audrey and Sasi, you can weigh in. I'd love if you weigh in if you can, but what are you seeing? Of course, when we all know at a high level that COVID has had a terrible impact on low-income people, there have been, like decades of progress around poverty has been washed away for a lot of families. So the question for both you, Audrey and Amit, is maybe beginning with Amit is, what are you seeing, right, in terms of the impact beyond the sort of high level? And how have you responded, or how are you responding to sort of, let's say, the changed new world order?
Sure. So, Krishna, our learning has been that in times such as these, the resilience of the community institutions comes to the forefront, when tested, and they've responded very, very actively and efficiently. And this has been our experience, across our project spectrums. When this unfortunate event occurred, as you know, everything came to a standstill. And projects after projects we had to play not that big a role. We needed to do some calibrations, restructure our projects to bring in some flexibility and respond to the prevalent situation. So I'll give two examples. In states such as Bihar, Jharkhand, these are all conventionally lower income states. It is these pre-existing community institutions who actually took over. A quasi-government function of trying to ensure that the lives were protected, the food was available, community kitchens got set up, and resource centers came up to facilitate all sorts of support services. This we saw across the project. Apart from setting up facilities to manufacture masks and those kind of things, which happened in large numbers across various states. So the responsiveness of these community institutions was very heartening and encouraging to see, and state governments relied intensively on these networks, be it the cooperative societies, federations, the self-help groups. They played a very meaningful role. Another example that comes to my mind is, let's say a different state altogether, Tamil Nadu, which is known for its MSME ecosystem, very vibrant, perhaps one of the best in the country. We again, by virtue of working in the rural livelihood space, there's a World Bank program there called TNRTP, Rural Transformation Project in Tamil Nadu, which looks after addressing the challenges which the vulnerable sections and the bottom of the pyramid face, but more on graduating them out of the group programs into their own enterprises and larger collective enterprises. So again, during the pandemic, you'll be glad to know that in a span of about 2.5 months, about 100,000 most affected, these nano entrepreneurs / enterprises who came from backward classes and those kind of areas, deal with disability, and their livelihoods had come to a standstill. So we did a back-end restructuring where money was made available, about $25 million, for these kind of people to avail in a combination of grant and soft loans with moratorium before the larger government program got announced, which was more as an emergency response. And about 100,000 people could avail this facility, in the range of 20,000-30,000 to 70,000-75,000, which could sustain them through this, period of uncertainty and bring them out of a situation where otherwise, their livelihoods would have come to a standstill. So these have been some examples, and had Mr. Balamurugan been there, he would have shared how, since he represents Bihar as a senior bureaucrat, has been working in multiple areas, how a migrant resource center got established. It used to exist earlier also, but it got upscaled. Its scope got expanded in the middle of Gurgaon, because there are a lot of migrants who come from Bihar to factories of Gurgaon, so that the first level handholding guidance could be provided by these resource centers. Otherwise they wouldn't get any information or any guidance on how do they go about living their lives. So all this came up, in a short span of time, with some tinkering here and there, and the credit goes to these community institutions and the program management units who've been running these institutions. That has, given us a lot of confidence, and we are trying to, align ourselves more to structure similar programs and expand our intervention in these areas. I'll pause there for now.
Thank you, Amit. Just a very quick follow-up question. So the $20 million response from the Tamil Nadu facility, is that is that ongoing, or how do you have a sense of how many people have been able to access that?
Yeah, so that was a limited period window. for about 3 months, loans and grants were given, and the life cycle of the facility is about year to 2 year, in case this happens to be a loan with a moratorium of 3-4 months. So while that limited purpose dosage continues its life cycle, what we're now trying to do, there's an element of now FinTech here. Having collected the information of about 100,000 people who, with their livelihood or their enterprise, the activities, where their demographic details, their little bit of their cash flows, we're trying to have a layer of if I may say so, sounding cliche, a platform in place where this information, their past transaction history, can be shared with the formal financial institutions. The cost of acquisition for these formal financial institutions would get drastically reduced. Some form of algorithm and data can be leveraged to track their past history and facilitate faster, more reliable decision making. So we are at a stage where we're trying to build the building blocks for next stage financing by the formal financial institutions. I wouldn't say purely digital, but a phygital mode. And perhaps Shachi can talk about that ecosystem which plays the role of a middle layer in between such communities and the formal financial institution. But I'm pretty excited about that. So there is a segment who's never engaged with a formal financial institution, a typical no-file customer. By giving them these dosage of small credits, we've been able to generate their database and connect this pipe to the formal financial institutions and create a market of its own.
Yeah. It's terrific how quickly you've been able to respond. An organization like yours, which is considered to be, she's large and considered to be less agile. It's just impressive how quickly you've responded. Last question on that before we move to Audrey is, who was the last mile delivery partner for this? On this,
I'll give you 2 examples. In Tamil Nadu, it's again the community institutions.
So multiple institutions.
Panchayat level institutions. There are federations and panchayat, PRI, panchayat level institutions, who are able to identify these vulnerable, constituents in the local geography, the village or the panchayat. They do the identification and facilitate the documentation. Bit of technology comes in play from the project management unit of the state government, and they bring in the funds to be able to pipe through the institutions on ground. That has been the partnership. Going forward, we are trying to stitch partnerships with multiple financial institutions. I'll give you another contrasting example in the state, coming back to Bihar, where Sashi Sabke is a partner there. You would know during pandemic, Government of India announced direct credit into the PMJDY women account holders account for 3 months. So there was some work going on to establish a women-led agent network in that state. That agent network in those difficult geographies played a very useful role. So corporate VCs and banks brought in the pipe, the CBS and the technology, and the last mile distribution of cash out delivery was managed by self-help group members acting as VC agent during the pandemic. It was a win-win situation. The financial institutions and their agent network partners didn't have to invest in mobilization of the agent network themselves in difficult rural geographies, and people who were finding, especially women, who were not well entrenched in engaging with technology, found a very good ally from her own village in the form of a neighbor who happens to be a female of a same group, providing the banking services to her on the last mile.
Thank you, Amit. This is helpful and wonderful to learn. We'll again come back to you, but moving over to Audrey for now. To Audrey, what is UNCDF? What have you sort of learned, and how are you responding in terms of COVID? Again, context of livelihoods and digital.
Yeah. No, thank you, Krishna, for the question. So Our biggest learning has been that, fundamentally and generically speaking, one of the biggest lessons from COVID-19 has been that, as individuals, as communities, even as countries, we have realized that, contrary to what we thought was the case, that we are not as shock responsive. Maybe we took that for granted. As a system, we're not very resilient. And if a system is not resilient, and Amit used this word, and I'm really happy because that is really the theme of what UNCDF is going to be doing in India specifically. And if a system is not resilient, I mean, obviously the individuals that partake in that system will also not be resilient. There was this study that came out in India. A couple of researchers, they compared the impact of COVID-19 on agricultural rural livelihoods in Haryana and Odisha. I'm not sure if you're familiar with that research, but I could share it at the end of this call. But what they uncovered was that, in both states, in Odisha and Haryana, farmers experienced income losses, obviously because of COVID-19 induced lockdowns. They couldn't sell their produce immediately due to travel restrictions. But there was some heterogeneity in between the states, and they boiled it down to the market infrastructure. And this is what I think COVID-19 did. It laid bare some of the structural defects in our market infrastructure, in what should be an enabling environment. And what they found was that in Haryana, even though farmers experienced income losses, they were a tad bit more resilient because Haryana has a good public procurement system, and because farmers there have good storage facilities. So they didn't have to distress sell. They also did incur post-harvest losses. Whereas in Odisha, that seemed to be a problem, but because Odisha had a diverse cropping culture, there was good local supply of fruits and vegetables. Their value chains are shorter. So really my point here is that in order for rural livelihoods to flourish and for rural people in rural areas to use a range of financial services in ways that are meaningful to them, we need an enabling environment. We need certain elements to be in place. But that is not to say that we don't do anything until those things come together. But this has been a big lesson. And what UNCDF is going to be doing, starting from actually this month, for the next 4 years, is partnering with the government of Odisha, which has done quite a bit in setting up an infrastructure of sorts for the rural women of Odisha. So there is this program, long-standing program of the government of Odisha called Mission Shakti, which started 19 years ago in 2001. So you can, this itself demonstrates that the state government is very much invested in expanding the rural livelihoods of its women. So it's a long-term commitment. And it's been a rural livelihoods project. So all of these, and we're talking about 7 million women organized in 650,000 self-help groups. So they harness the power of the collective to provide these women with livelihood opportunities and access to first-level financial services, such as bank accounts and also credit from the government, up to 3 lakh rupees, free of interest. And now UNCDF wants to build on this infrastructure that the government has built. And another thing I want to add is that these women also participate in local government. So Mission Shakti, the administration of Mission Shakti has formed a women's cabinet of sorts. So self-help groups represent women at important government meetings and take decisions. So that is great for women's agency and economic empowerment. So now UNCDF is coming into the picture to take this project to the next frontier, which is to say that to help these women now expand their businesses. They have been slowly building these livelihoods. Now it's time to grow them. It's time to access markets that you have not accessed before. And for that, we are trying to marry, like I said before, we work at the intersection of, innovation and policy. So we're trying to work with private sector institutions to invest in some innovative business models, such as e-commerce. We're also looking at other products, such as micro pensions. We're looking at unique ways of financing these women with cattle financing products, for example. Ultimately, the goal is to give them access to a range of financial services, not just credit or not just savings, because they need many instruments to lead well-rounded financial lives. And ultimately, the goal is to make them financially resilient. So they can, we're still living in the midst of, an unabating pandemic. So the shock is still there, but to prepare them for the future so they are financially resilient should such shocks arise in the future.
Thank you, Audrey. Yeah, a couple of points, you said is one, these issues are a lot sort of more interlinked to a lot of other issues, as we all know, and that's where things become complex. And thanks for highlighting some of that. If we have time, we'll come back to that. Sasi, would you like to respond to that? I have a couple of other questions, but before I go there for you, just responding to the sort of COVID and how you're responding to this.
Yeah, thanks, Krishna. COVID is kind of impacted in an interesting ways for someone like us. As I said, there are two sides to the coin that we manage. And in that process, Amit has mentioned that there is this whole government benefit that have been given out. And those are something that were to be distributed effectively to the communities out there. And these are specifically the women PMJDY accounts that were targeted with very small life support cash transfers, right? 500 rupees per account per month. So it's about 3-month program. And when lockdown started, I hear some disturbance. Are you hear me well?
There is slight disturbance, but we're still able to get most of it. I don't know.
Okay, let me continue.
Yeah, please continue. I'll try going on mute and see if that works.
Okay, great. I think this is better. So in that initial days, obviously nobody understood what lockdown really means, and who should be closed, who should be open. Banking is supposed to be a financial service, but our agent networks also a part of that. So there was a lot of confusion, but I think with the industry bodies work, BC Federation of India has acted on it and tried to clarify. So it really helped in a way that, people cannot travel. They can obviously not go to the nearest ATM or a bank branch to draw the money, but the agent outlet was made open. And interestingly, 90+% agents decided to keep their shop open and allow this transfers to happen. So there's a massive withdrawal campaign that took place during this period. Despite all the risks, there were a lot of precautions that were taken, and it is amazing how these last mile agents have ensured. We have very, very little infection rates also among the agents that operated throughout this period. So one side is allowing citizens to access this much needed cash that government really wants to avail, want these citizens to avail in the difficult times. That is, I should say that we have recorded the largest number of transactions ever in this network during the time of lockdown. So it's a kind of a interesting way to look at it. But on the other side, where we enable credit, the business has actually come to a standstill because businesses were closed. There was no cash flow and there was no ability to repay. And of course, government has also announced a moratorium. RBI has come forward and given the payment holiday to everybody. So that helped quite a bit, but it did put a lot of restrictions on the movement, customer contact, educating customers on what a moratorium really is. A lot of nuances are associated with these policy measures. So on one side, credit became a bigger challenge. We were not able to also distribute new credit because it was difficult to contact customers to know what their needs are, what kind of an impact that they have been going through because of the lockdown and all. So one side, it was difficult for us to either collect or push more credit in the system. But on the other side, we were able to enable cash transactions quite successfully. So it's a that way balanced kind of a thing. And in rural especially, this whole availability of agents and decently working technology that is in place. It sounds like pandemic came in the time when people are ready to handle it in some sense, right? So it really helped having technology in place and having everything in place. Infrastructure really came together to manage that situation.
Thank you, Sasi. Insightful. I will take a minute or so to unpack some of the really interesting points you've raised, and then we'll move to the next one. But as you said, about 200-300 million low-income families were able to actually get cash in the middle of the sort of, let's call it, lockdown, right? And I really shudder to imagine, in the old days, I don't know how would they have gotten any cash at all, right? Imagine the chaos, ensuing chaos without all the last mile distribution on the payment side. So I don't know what that sort of would look like, but it will be extremely chaotic. So it's amazing, as you said, how this sort of plumbing and wiring that we've been trying to put together for years was ready just in time for this on the payment side. Now on the credit side, of course, you gave us an interesting snapshot of the challenge, but and credit is a key enabler for livelihood, right? There is, we on the foundation side, just a 30-second diversion, is we focus on financial health. So before the pandemic, there was just a lot of impetus on, helping people build savings and resilience and stuff, because there was a lot of credit. Not a lot, but the significant people had credit access. Now that is turned on its head, right? Credit is all the more important for people to restart their businesses, to kind of to rekindle the economy. So what is your view on one? Where are you right now? Is it picking back up, and where do you see kind of the next year or so from a credit perspective, both for Sabke and broadly for the sector, but of course from a rural livelihood, low income perspective?
Sure, it's really again a conundrum where this is the time when you need to make the credit available because there's a lot of restart that is happening and there's a lot of revival that is also required. At the same time, the customers are also struggling to pay back their existing loans. One is it kind of already the credit histories are a bit impacted because even post moratorium, it's not that everybody is able to pay. There is still a lot of lag in terms of how much we're able to collect. And then at the same time, we need to go back to help them out in fulfilling their working capital or investment needs. So there is that challenge in terms of, how many customers are able to qualify for additional loans because their lending is a risky business. And from a lender's perspective, the intent is not enough. You have to make sure that the risk is managed effectively. While we are already in a situation where the risk is escalated. The second challenge is, how would you ensure there is capital that is available from the lender side to lend when your collection rates are low, right? Because there is this whole challenge of, although of course RBI has done its bit in terms of making a lot of liquidity available in the market, but it is from the financial health of the lender perspective, it becomes a lot challenging. Despite all this, we are today at about, I would say 60-70% of the level of credit that we were doing last year at the same time. In my opinion, that's kind of a good number to have because I think in next 3-4 months, we will be at a full scale credit distribution. And of course, again, technology being where it is today, there is a lot of advantages that we are able to derive because reaching customer is a lot easier and assessing customers' credit records are a lot easier thanks to all the railroads that were built. But still, we are at not the best stage where we should have been. And given all the constraints, I think the industry is doing its part.
Thank you. I was just unmuting myself. Thanks, Sasi. I really hope we can sort of, of course, you as well as the industry can get back to 100%. I know there is sort of this whole trust deficit right now through the supply chain, as you said. It's a difficult conundrum, but and it could be a long conversation, but I'll sort of give it a pause and move to I think we have about 11 minutes to go. So we'll get to sort of the concluding side of it. Let me go to Amit for a moment. And, Amit, from a forward-looking perspective, again, based on your global, regional, local experience, what challenges do you see in India to, grow from here, to keep up, as you said, on this path towards economic progress or eradicating poverty? And of course, on the flip side, so India has done a terrific job on reducing extreme poverty, including hundreds of millions of people over the last couple of decades. So what can others learn from from Indian experience, and also what are a couple of opportunities or challenges you see in India to take it to the next level from here? Amit, if you're speaking, you're on mute.
Sorry. Starting with the challenges, the next level challenges that, as I see it, that we need to address is, I'll take a leaf from what Shashi said, such a huge BC agent network, how well has responded to a situation that we all have been facing. I think the next challenge and opportunity is to try and see how cash out gets minimized, and to the extent possible, especially in the rural context, an enabling ecosystem and incentivized ecosystem is built so that the funds are retained in the bank account, although the fund movement happens. What would take to make that happen? Of course, you need a much more entrenched acquiring network. By itself, that acquiring network put in place, I don't think can solve that problem, because it needs a lot of hand-holding and customization also. Because now the use cases are specific, as already I mentioned in the beginning. As in India, just to give an example, we have about 7,000, 8,000 or up to 10,000 farmer producer organizations. One FPO would be anywhere between 500 to 5,000 farmers. Now, do we know how many such FPOs use digital financial services? Probably a handful, simply because the solutions are not catered to their requirement. It's no longer plug and play. More and more customization is required to fit the specific use cases in the rural context. That's an opportunity and a challenge that I feel we should look closely at and try and tap that. Related to this, I would say very, very important is the need to again put in more effort and investment in ensuring customer protection and quality grievance redressal mechanism. As we make deeper inroads into the rural ecosystem and make people come on board digital services, this customer protection and grievance redressal has to be the best that one could offer. That brings me to one related point. As Shashi would echo, during this pandemic, when the payouts through the banking channel were being facilitated, because of the sudden increase in the traffic on the bank's network, the failure of transactions also increased. So there were a lot of last mile transaction failures. Account debited but payout didn't happen. Biometric failures, which shows the infrastructure wasn't equipped to handle this kind of a situation. Of course, we can say this is a black swan event, and you can't prepare for that. But the fact that we are making deeper inroads into the rural ecosystem, this was waiting to happen. You add more and more numbers, you cannot live with the same infrastructure and continue to use that infrastructure to service more and more customers. So that is something that we need to ramp up, align, and also build up on the product suite. Plain vanilla product suites, just because it's a bottom of the pyramid customer or a rural customer, small ticket transactions would work. This has to fit into the life cycle requirements and their specific use cases. So that would be my next ask or a suggestion, if I may say so. And lastly, the interplay of the public good information, the data sets that government manages, and what a lot of tech players bring to the table, this needs to be more synergetic. So those how the data moves between different actors needs to be more synchronized, standardized, so as to avoid duplication of effort. A lot of government programs, a lot of data sits in silos, which is not in either shareable format, or there are not clear protocols as to how government could share a citizen's data. And Aadhaar taught us how this could be done in a very, very, safe and sound manner. So we need to go beyond those binary data points and expand the canvas and look at mechanisms of, enabling an interplay between, these ecosystems to help the customer/beneficiary at the last mile. So that would be my broad brush view on this.
Thank you. We have about 5 minutes until we are asked to stop. So there is just a lot, but I think I'll have to perhaps just focus on one last issue that I really wanted to discuss. And then quick responses on that would be great. But before I go there, any Audrey, Sasi, any quick reaction to Amit, or I'll move to the sort of digital divide bit that I wanted to quickly, and FinTech that I wanted to touch base with you on.
No, I just like to say that, I echo almost everything that Amit basically mentioned. I would just emphasize the consumer protection bit because, Shashi mentioned that credit is the mainstay of the financial services industry at the moment, given the situation we're in. But, we still have to be mindful of the microcredit revolution that India went through. And
okay, so let me put all three of you on a quick spot and say, so what do we do about consumer protection? Like one thing in 10 seconds, like what needs to change? Amit kind of did allude to that very quickly, I think. And one thing is, but sharing of data, and there is a standard framework for that, would help. But is there anything that comes to your mind that we need to that sort or do? This is for everyone, Audrey. I didn't mean to put you on spot, but Sasi, what is on the consumer protection? Just we constantly keep discussing it, but it's of course a difficult problem to solve. But what is one or two things that we as a sector need to do?
Yeah, I can go first, and very quickly, the one thing that just comes to mind, off the top of my head, is to, and this is for financial institutions that actually dole out credit. I would say not to rely on, a one-size-fits-all type of approach when you assess the creditworthiness of a customer, especially in the situation we're in, such as looking at a credit score and saying, okay, let me just give a loan to this customer. That could lead to a lot of false positives, but also false negatives. So I would say use your discretion, use a variety of methods to decide upon the creditworthiness of a customer, and in a way that protects the customer from undesirable, circumstances in the future.
Yeah, no, that's an extremely important point. It's happened in China. It's happening in India post-COVID. We all know this. A lot of FinTechs are in that sense. They are on the spectrum, so it can easily slip into sort of a very indebtedness, exploitative situation. So yeah, no, I hear you. Extremely important. We have 2 minutes. I don't know how we'll cover, but very quick responses on the digital divide. We, of course, all of these conversations weirdly assume that we are there in terms of tech, and there is all this awesome tech. But a lot of the times when we visit people, or women or groups and people in rural areas, right? Only I don't know if I don't have a national database on this, but it's usually about 20-30% women have access to smartphone, and there is of course a challenge of usage. Of how well are you able to use it? So for me, a lot of that, what we call rural India, they're just not there yet digitally. So how do you see that? We just don't have a lot of time. This could be a separate topic by itself, but any quick sort of parting thoughts on that would be helpful.
Let me come in. From a rural-urban difference, Krishna, I think there is a difference, which is no secret there. But in a way, pandemic has become a bit of a leveling play in terms of allowing rural to move faster into the digital world. Urban, of course, has been moving fast and it has become speeded up. But We, for example, enabled online payment for our microfinance customers, which was not the case before pandemic. It is a need that has come up and we had to do it. So that way, 10% of the customers today pay through, apps which they would not have ever imagined before. So things are changing. Obviously, the phone ownership, usage are challenges, but I think when the situation comes to have them do it, I think we have seen rural people adopting really fast. So from that perspective, I think if there is much more, this momentum is taken advantage of, then I think we can move into that journey faster than it was. I would put it with that positive.
Thanks, Sasi. Amit, last really 30 seconds. Any parting thoughts, Amit and Audrey, on this?
I'm not sure if I could hear you properly, but to start with, I would suggest that we request the regulator and the policy makers to share more sex disaggregated data on various indicators, parameters, the usage of bank accounts, smartphones, so on and so forth. Currently, this is not available, beyond the number of bank accounts opened by males and females, you don't get next level data. Once that starts coming out and performance indicators are put in place to measure this, I think some progress will be achieved by this itself.
Yeah, no, I can't emphasize the whole measurement bit enough. We just, as you said, we really lack the next level data, and it makes a world of difference once you start, going into details, and so can't emphasize that more. Audrey, any parting remarks before they ask before they shut us off?
Yeah, no, well, I wanted to also discuss the measurement piece, and I guess Amit has already brought it up, but I would also emphasize digital literacy. I know it sounds very cliche, but it's also very important, and to localize digital literacy is important.
Okay, of course, it's a dauntingly complex subject, but it was, we didn't have enough time. Nonetheless, it was really fun interacting with you. Thank you again for your time, and I hope the listeners had something to take away from.